All right, let's talk about a stock that has been on an absolute roller coaster. Centrus Energy, ticker LEU. Now, this is a nuclear fuel company, but it's gotten tangled up in the massive hype around AI, and the result has been just extreme volatility. So the big question we're tackling today is this. Is Centrus a key player in powering the future of AI, or is this just a speculative bubble waiting to pop? We're going to dig into the data and find out.
Okay, here's our game plan. We're going to look at what's causing these wild swings in the stock. Then we'll check out the company's financials to see if they're actually healthy. We'll also dive into their unique position as a government-backed monopoly. And to wrap it all up, we'll lay out 3 possible futures for the company.
So, analyst, let's just jump right in. The way this stock has been moving is, well, it's insane. This isn't some hot tech startup. It's a nuclear fuel supplier. But it's trading with this incredible, almost violent volatility. What in the world is driving this?
Well, before we get to the recent choppiness, we have to zoom out. The data shows a total shareholder return of more than 2,200% over the last 5 years. So what you're seeing isn't just a sudden spike. It's the market fundamentally re-evaluating what this company could be worth over a long period.
Wow, okay, a 2,300% gain. That is just staggering. But that massive long-term run makes this recent drop-off even more confusing. I mean, to be up that much and then suddenly plummet over 30% in a single month, something's got to be triggering these huge swings. What is it?
The data from the Q3 earnings report points to a clear, immediate catalyst: an earnings miss. The company reported earnings per share of just 19 cents, while the consensus on Wall Street was 36 cents. Now, that's a big miss, and it definitely triggered the sell-off. But that's just the surface-level reason. It's not the real story here. Right? The analysis shows there are actually 3 much bigger forces at play here. First, there's a huge geopolitical reason. The US wants to stop relying on Russia for nuclear fuel. Second, you have the insane energy demands of the AI boom. And third, there's a serious supply crunch for the next generation of nuclear fuel. These 3 things are the real engine behind the stock's valuation, and it's why a simple earnings miss can cause such a massive reaction.
And that AI power demand is really the heart of the story for investors. Think about it. The data centers that run modern AI are unbelievably power hungry. The big bet here is that the only way to power them cleanly and reliably is with a new generation of nuclear reactors called small modular reactors, or SMRs. The catch? These advanced reactors, they can't just run on standard nuclear fuel. They need something entirely new.
Okay, so it sounds like there's an incredibly powerful story driving this stock. You've got geopolitics, the AI gold rush, a critical resource. It has it all. But we all know a great story doesn't automatically make a great investment. So let's get into the nitty-gritty. Analyst, what do the financials actually look like? Do the numbers back up the hype?
This is where things get interesting. When you look at the valuation, the numbers show that Centrus is trading at a very high premium. Its price-to-earnings ratio, or PE, is somewhere between 40 and 56. Now, compare that to the industry average, which is down around 14. So you're looking at a valuation that's 3, maybe even 4 times its peers. That's a clear signal that investors are betting heavily on future growth, and that always comes with a lot of risk.
Okay, so let's break that down for everyone watching. A PE ratio that's so much higher than the industry, what does that actually mean for someone thinking about investing in this company? What's the real risk here?
It means the market has baked a massive amount of optimism into the current stock price. For an investor to make money from here, Centrus doesn't just have to do well. It has to knock it out of the park and exceed already sky-high expectations. If anything goes wrong, if that growth story falters, well, the stock has a very long way to fall to get back to a normal valuation. But that's only one side of the coin.
Because on the other side, you have the company's incredible efficiency. The data shows a return on equity, or ROE, of over 84%. Now, for those not familiar, ROE is a fantastic measure of profitability. It basically asks, for every dollar shareholders have put into this company, how much profit does it spit out? And an ROE of 84% is, frankly, off the charts. It tells you this company is an incredibly efficient profit machine, and that is a big part of why investors are willing to pay that high price. 84% ROE? That's just wild. And okay, that definitely helps make sense of the high valuation. But it also raises a huge question. How? How on earth is a company in a heavy industry like nuclear fuel getting that kind of return? There must be something special here. What's their competitive advantage? What's their economic moat?
Their entire economic moat can be summed up in 5 letters. HALEU. HELU. It stands for high-assay, low-enriched uranium, and all you really need to know is that it's the specific, high-octane fuel required by all those advanced nuclear reactors we talked about, the ones needed to power the AI revolution. And here's the kicker. Right now, the only reliable commercial supplier of HELU on the planet is Russia.
And that is where Centrus becomes a potential monopoly player. Public records confirm it. Centrus is the one and only company in the entire United States with a license to produce HALEU. They just started production in late 2023. This isn't just a business advantage, it makes them a piece of critical national infrastructure. They are the American answer to Russian dominance in the space. And it's not just theoretical. They already have deals in place with key next-gen reactor companies like TerraPower and Oklo.
But, and this is a really important, we have to look at the company's history. This rosy picture is very recent. If you rewind, Centrus, formerly known as USAC, actually went through Chapter 11 bankruptcy back in 2014. It was a government entity that struggled massively after it was privatized. And even more relevant, they tried to get a huge government loan for a similar project back in 2009 and failed. So while their position today looks unbeatable, their past is littered with red flags that any investor needs to be aware of.
Wow, okay, that context is absolutely crucial. So what we've got is this incredible AI growth story, a sky-high valuation, a powerful government-backed monopoly, and a history of bankruptcy. That is one heck of a mixed bag. So, analyst, let's put it all together. Let's boil it down to the potential outcomes. What are the most likely future scenarios here? Okay, based on all that data, we can forecast 3 potential paths. First, the best-case scenario. We see this as having a medium likelihood. The trigger here is simple. They get the massive government and private funding they need to scale up HALEU production in a big way. If that happens while AI demand for power explodes, the company grows into its huge valuation. The most probable outcome, though, is the neutral case. This has a high likelihood. Here, HALEU production ramps up, but slowly. The company chugs along with its older business, and the stock's hype dies down, bringing the valuation back to earth. Finally, you have the worst-case scenario, which we see as having a low likelihood. The trigger here would be a repeat of history. They fail to secure that critical funding. That could lead to a liquidity crunch, forcing them to issue more stock, which would hurt current shareholders.
So when you boil it all down, it really comes to one fundamental question for any investor. Is Centrus Energy holding a golden ticket, a government-backed monopoly that's essential for powering the AI future? Or is it just a high-priced lottery ticket, a gamble on a technology that isn't at scale yet from a company with a very shaky past? The data can argue both sides, and how this plays out is going to be one of the biggest stories to watch. That's all we have for you today. Thanks for tuning in.